Hey, what's up, stock compounders? Brad here. So today we're going to be talking about stocks that smart value investors have bought this week, okay? I'm really looking at April 1st through April 8th, and this is in the Corner of Berkshire and Fairfax thread. What are you buying today? So I just went through that. I made a list here of 11 companies that people have reported that they're buying in Corner of Berkshire and Fairfax. And for any of you who know Corner of Berkshire and Fairfax, you know it's a great place to hang out with other smart value investors. So here's the spreadsheet I made for this last week. Again, you can see 11 companies. And I say this every week. I'm just going to go real quick what these columns are. So market cap, size of the company, that's no mystery. Insider ownership. So this is where we want to know that the management team has skin in the game, that their interests are aligned with ours, those of shareholders. So higher insider ownership tends to be better. I like to see more than 10%, okay? So that's what I'm looking for in insider ownership column. The guru column. Has a super investor bought the company? Do they own it as of the most recent 13F filing? So you can see here the biggest one, Visa, 20 guru investors that are tracked by Dataroma own Visa. So you get a point there if you have at least one guru that's invested in it. It's really bowling with bumpers, okay? Only investing in companies that have already been vetted by, investors with a great track record. And then the third column of significance here is VIC, Value Investors Club. Has a smart investor done a write-up on that company, a long thesis for that company? And then I just put the most recent month and year that the write-up was done for these companies. And so these three columns, insider ownership, guru, and VIC, are how I determine the score, okay? And I just sorted these by score. So, the top ones, they have kind of more of the high-level metrics that I like to see. And then we go down to the bottom ones, which are all under 10% insider ownership, don't have a guru who's invested, or at least we can't see because some of these are outside of the US, and then don't have a recent Value Investors Club write-up. And then the last two columns here, acquirers multiple. That's just enterprise value over the last 12 months of operating earnings, okay? It's kind of a measure of how cheap a company is. Higher being more expensive, lower numbers being cheaper. And it's really one of the metrics that Joel Greenblatt uses in the magic formula. It's the inverse of earnings yield, okay? And then the last column, 10-year revenue growth. I'm using Ticker Terminal to look up these financials. And I just look at what was the revenue 10 years ago and what was the revenue in 2020 in this case, and how did it grow over that time. May have been choppy. I didn't account for what it looked like between those 2 points. Just what was it 10 years ago? What is it now? And then this is the annualized revenue growth over those 10 years. So really, we get a sense for how cheap a company is and how strong of a growth company it is with these two columns. If you see 8 years and 7 years, it just means that's all of the data I had with revenue to. So, for example, Alibaba, this is using 8 years, the last 8 years of revenue numbers, as opposed to 10 years for the others. So let's dive in. Alibaba, okay? Big news, Charlie Munger. I just made a video about it. Charlie Munger's daily journal company made a 19% bet on Alibaba in the first quarter of 2021. So I bought some. I made a video about that. I want to say something else here that I found interesting about Alibaba. So when you look up Alibaba in Dataroma and you see who holds it, Charlie Munger, yep, we know he just bought. Greg Alexander, okay? So I had no idea who Greg Alexander was until I did a little digging, and it turns out, I think it was back in like 2011, Warren Buffett, kind of shared who he thinks the best 3 investors are that are still investing. Li Lu, Seth Klarman, no surprise with Li Lu and Seth Klarman, very highly regarded in the value investing community. Now, the third name was actually Greg Alexander. Okay, he used to work for Sequoia, but it appears possibly he started his own fund. I think just a handful of years ago. I haven't dug too deeply into this, but this is really interesting. Greg Alexander. If it's the same one, I mean, obviously that's probably a fairly common name. There's nothing unique about Greg Alexander. But if it's the same guy, could be a great cloning target. So I'm going to be digging deeper. Let me know if you guys know anything about Greg Alexander and Conifer Management. That was interesting. And of course, seeing that he bought Baba also makes me interested in learning more about him. Let's get back to this. So that's Alibaba, very strong numbers. It's got like half the acquirer's multiple number as Amazon. And China has like 4 times the number of people as the US. Okay. So you've got Alibaba, the Amazon of China, serving a much larger population, 4 times larger by my kind of rough calculation. And the market cap is significantly lower than Amazon. So, even though it's a huge company, 632 billion market cap, I mean, it sounds like it's getting into the cloud and similar areas to Amazon. Could be very interesting in terms of how large Alibaba could grow. So, anyway, guys, a lot of content out there recently about Alibaba. So very interesting company. Second one, Louis Vuitton, okay, luxury products company based in Paris, France. Market cap, pretty large company, 345 billion. Everyone knows Louis Vuitton, strong brand name there. Very weak on the insider ownership. Only one super investor, tracked by Dataroma, owns this company. And it's the over-the-counter ticker for Louis Vuitton. And then there is a write-up just from a year and a half ago. So 2 points for Louis Vuitton with the Guru and the Value Investors Club write-up. Acquires multiple very similar to Alibaba on the higher end. And when you look at the 10-year revenue growth, okay, it's pretty challenging to compare to Alibaba in terms of how cheap and how fast it's growing. 8%, nothing to really get too excited about for me. Now, I haven't dug into this company, but I would be very curious with Louis Vuitton how they're playing TikTok, how they're playing Instagram influencers. What is their current marketing strategy to grow sales, to grow the brand? I definitely want to see that they're really tapping into these newer social networks in order to sell product. Third one on the list, Etsy, okay, a 2-sided online marketplace based in the US, but it's international at this point. Etsy is intriguing to me. Again, it's been on my list of companies to dig deeper into. If you look, who is it? There's a guy I've talked about recently who has Redbubble as a very large piece of the portfolio. I'm forgetting his name. I'll put it in the description. But in one of his recent quarterly letters to shareholders, he talks about Redbubble, talks about Etsy, and kind of how he values these 2-sided online marketplaces. Could be an interesting place to learn more about that. So again, I'll link to that in the description. I'm blanking. Oh, Bonsai Partners. Okay. Rosenblum, I believe is his name. So you got two gurus in here. You got a very fresh write-up, just 6 months old. So 2 points for Etsy. Seems pricey, but again, I don't have a strong sense for how big this company can grow, what the total addressable market is for Etsy. So that would be a big part of the equation here. And then revenue growth off the charts. I mean, very impressive revenue growth for Etsy. And again, just 8 years of revenue data for that number. So, yeah, Etsy is compelling. I don't use Etsy. I mean, I've used it once to get my wedding ring, actually. But, it's not something I'm very familiar with. So that makes it kind of easy to kick the can down the road in terms of diving in. Fourth one on the list, JBG Smith Properties. This is a real estate investment trust focused on high growth, mixed use properties in Washington, D.C. And it sounds like they actually got the contract to build Amazon's headquarters in Washington, D.C., or maybe just right outside Washington, D.C. So that's a pretty big claim to fame there with that project. 4.3 billion market cap, fairly small, under 5 billion. That's kind of a nice place to shop for companies that potentially have a lot of room to grow. 5% insider ownership doesn't get me excited. There's one guru who owns it, and then pretty recent write-up for a score of 2 there. Didn't have an acquirer's multiple because the company lost money last year. So an acquirer's multiple doesn't make sense in that situation. And then 7-year revenue growth for this one, 3%. So, this is one, it's not going to screen well. You kind of have to really dig in to the details, I think, to wrap your head around this one. But interesting nonetheless. Number 5 on the list, Visa. Okay. Now Visa seems like it could be an interesting play in an environment of high inflation. Okay. Because with Visa, you're really just collecting a percentage of whatever people are spending. So even if the dollar is worth less and less, right? These businesses are charging more and more for the same products. We get a fixed percentage of those transactions. So, that I think I heard that argument from Guy Spear. So that makes Visa, MasterCard, American Express potentially interesting in terms of the macro, what's happening in the macro. 442 billion market cap. Everyone knows Visa. Very little insider ownership. Very popular with the super investors. No write-up. There's never been a write-up in Value Investors Club for Visa, which is a little bit surprising, but acquires multiple 32. Everyone knows it's a great business, so it's demanding a pretty high multiple. And then 10% revenue growth. Strong, nothing exceptional, but I think it's been fairly consistent. It'll be very interesting to see, how Visa plays, the whole shift to crypto, fintech. It's an industry that's really changing quickly. It's ripe for disruption in a sense. So that's one thing. If I were investing in Visa, I would really want to know, what is their 5 to 10 year plan in terms of, disruptive technology. That would be an interesting thing to get some insights around. Number 6 on the list, British American Tobacco. This was on the list last week as well. It's a UK holding company for the manufacture and distribution of tobacco products. Not a company I have any interest in. I do not think highly of tobacco products. I'm actually allergic to tobacco. When I was like 15, I got an allergy test, and one of the things I was tested for was tobacco. And so that makes me doubly less interested in tobacco. Being allergic would have that effect. Very weak on the insider ownership. No gurus. Fairly recent write-up. So take a look at that if you're interested. In BTI, acquires multiple 10. So on an acquires multiple basis, it's the cheapest company on this list. But you can see the revenue growth is also fairly weak at 6% per year. Next on the list, Planetal SPA, okay, an Italian fiber telco. This IPO just in December of 2020. So we've only had 1 quarter under the belt for this company being public. And, super small, $36 million market cap. That is the smallest I've seen since I've been doing these videos for about a month now. Very high insider ownership, which is what you'd expect with a company this small, but still a good sign. No gurus own. I mean, it's too small for a guru to really touch this thing. No write-up, and then no real numbers here. Actually, in Ticker Terminal, there wasn't even data in there, okay, because it just IPO'd in December. So one benefit of this, well, a couple benefits. It's really small. It's in an industry, fiber telecommunications, that's potentially an interesting space for growth. And there's not a lot of transparency around the financials. So an Italian, so there's a number of things going for it. If you're interested in small opportunities that are kind of off the beaten path, this could be one to look at. Next one, Pure Cycle Corporation, PCYO. Now, this is a water and wastewater systems. They design these systems. They install these systems in the Denver, Colorado area. Okay, water and wastewater. That's an interesting niche. So market cap, 318 million, quite small. 5% insider ownership. I really wish there was a higher insider ownership. I would take a deeper look into this. If this was 20% plus, I would look at it, because I do have an interest in this area of water and wastewater systems. From my permaculture background, I have some experience with that kind of thing. No gurus here, no gurus. Probably too small. And a very fresh write-up, okay, just 4 months ago. We've got a write-up in VIC. Acquires multiple is very high. I think it's primarily because the earnings are so low. Just in the last couple of years, this company has become profitable. So I think that's right. I think I'm remembering that correctly. And then the 10-year revenue growth, phenomenal. But again, I think this is just really over the last couple of years that the revenue has started to take off. So, it's not like a long, steady trend that we can count on. It's sort of a hockey stick growth there. So, interesting. I love how small it is. It's in an interesting sector. Again, insider ownership gives me pause with this one. Number 9 on the list, Great Lakes Dredge and Dock. Okay, now provides dredging services in the U.S. Now, in Corner of Berkshire and Fairfax, the reason that this investor gave for this to be potentially worth looking at is what Biden wants to do with the infrastructure aspect of the stimulus. Okay, big infrastructure component to that. This could be an interesting play on that less than $1 billion market cap. Nothing exciting here, okay? Insider Gurus, VIC, there's just not much to sink my teeth into there. Cheap, potentially 11 on an acquirer's multiple basis. But you can see revenue growth. I mean, it's basically stagnant for the last 10 years. I mean, it jumped around a little bit, but looking 10 years back, looking today, it hasn't done anything. There's no long-term trend with the revenue. So that gives me pause as well. But you know, with all this infrastructure money coming out, it could be a short-term play on that. Not something that I'm interested in, but maybe you are. And then these last two, okay? Mako Mining Corporation and Sailfish Royalty Corp. Now, Mako is primarily a gold exploration mining company with sites in Nicaragua and Mexico. Very small. You can see under 200 million market cap. And then Sailfish Royalty is, you know, royalty and streaming gold company, basically, that has, you know, one of its royalties comes from Mako Mining Corporation. There's others as well. But these two are kind of related to each other. And actually, the investor that's talked about these in Corner of Berkshire and Fairfax was on a podcast, I think just earlier in April. So it's very fresh. The talk about Mako and Sailfish starts at 34:30. Here's the link. So check that out if you're interested in those two companies. Yeah. What else? Did I want to say anything else? So these two companies remind me a lot of Massive Capital. And there's actually the largest shareholder of Mako Mining. Owns I think over half of the company. It's kind of a larger hedge fund. And they also own Polaris Infrastructure, which I think is also a mining company that's owned by Massive Capital. So again, if you're interested in these small mining companies, I highly recommend reading Massive Capital's quarterly letters to investors. All you have to do is give them your name and email, and you can access those quarterly letters. And there's, you know, half of their holdings are, you know, some of these smaller mining plays. So that's what comes to mind with these two at the bottom here. Anything else? I think that's just about everything, guys. Let me know. One more thing, very important. So I was informed today, Mohnish Pabrai just added to his Ceritage Growth Properties position. And you can see it right here, Dalal Street LLC. Filing date was yesterday, April 7th. Statement of acquisition of beneficial ownership. If we open that, now I think this is wrong, okay? Pabrai owns more than 10% of the common for Ceritage Growth Properties, but this says date of event which requires filing of this statement is December 31st, 2020. My understanding is if Pabrai owns more than 10% of the common for Ceritage, any changes to his portfolio in Ceritage has to be disclosed within like a day or two to the SEC. So I think this is wrong. I think this is a transaction that's happened in the last couple of days, probably April 6th or something like that. And it's, you know, it's kind of cryptic to gather what actually happened here. But the easiest way to do it is to look at the number of shares, okay? So if we scroll to the bottom, you can see shares, 5,020,684, okay? So we're going to go into Ceritage. Now we're going to go into Mohnish Pabrai's investment fund portfolio in ticker terminal. And we can see how many shares are disclosed by Ceritage for Ceritage Growth Properties as of the most recent information in ticker, 4.7 million. Okay, so 5.02 million is what he has now. So a 6% increase for Pabrai. You know, nothing substantial, nothing earth-shattering there. But at the very least, what it says is that Pabrai is still bullish on Ceritage Growth Properties at today's prices at around $18 per share. So that's encouraging. I like to see things like that as an owner of Ceritage Growth Properties. So that was just kind of the last golden nugget I wanted to share for all of you who stuck with me till the end here. Let me know in the comments in terms of what people are buying on Corner of Berkshire and Fairfax. If you own any of these or if you're digging deeper into any of them and whether you're bullish or bearish. Just curious what you guys think of this list of companies this week. So again, hit me up in the comments. Let's start a conversation down there. And without further ado, thanks for watching, and I'll see you all in the next video. Take care.